Let's go ahead and hop into the next topic, though. Coming from CoinDesk, newly minted Bitcoin miner Gem mining reaches a hash rate of 1.25 exahash. Gem's mining power now accounts for about 1% of the Bitcoin's network's total. Gem Mining, a Bitcoin mining company started recently by former U.S. Marine and 2018 candidate for Southern Carolina Governor John Warren, reached hash rate capacity of 1.25 exahashes per second with 13,118 mining machines. The company is currently producing 6.5 Bitcoins a day and has fully funded purchase orders for another 19,000 machines expected to be online by end of 2022. Quote, the successful deployment of 13,000 active miners is a major milestone in the growth story of Gem Mining, said Warren, who is also CEO, in a statement on Wednesday. Gem's mining power now accounts for about 1% of Bitcoin's network hash rate of about 161 exahash as of December 28th, according to data analytics firm Glassnode. The Greenville, South Carolina-based miner started mining in February of this year and formally launched earlier this month. After raising over $200 million in institutional capital, it had revenue of $7.8 million in November. So this is going to directly go into essentially the next article, which is going to be talking about Elon kind of analyzing the Bitcoin white paper. And this is important to keep into account because one of the problems that we've always had to talk about that feels like it falls on deaf ears. There's a couple things, right? But one of those is like the original intent of Bitcoin being mined by a CPU, which meant that, one CPU, one vote, everybody got to vote. And it was kind of like it helped distribute that power, which was supposed to help distribute the wealth. Now what we are seeing, of course, is institutional investors into mining. And it's really hard as a smaller miner to build up if you haven't been into ASICs and been building up your capital within it. It's really hard to compete with a company that has access to institutional investors, has access to, let's say, government control to a certain extent, right? We're talking about a South Carolina governor who can, influence at least at the state level, probably even at the national level, favorable outcomes for his particular mining setup. He can influence, of course, power costs and that sort of thing. And when you start getting into people in power taking control of these things, it makes it very difficult for, the everyday man to mine. This is why we talk primarily about GPU mining, because with GPU mining, it was a way to start building up those assets that are traditionally locked away for the top 1%, kind of the upper level echelon of society as far as economically, right? And that is kind of disappointing to me, because the financial revolution, as far as that goes, from a mining perspective, is kind of made more difficult with essentially what is ASICs. At the end of the day, what makes this possible for someone like that is going to be those application-specific integrated circuits. Would GPU mining fully solve that? Not necessarily. And that is because they could just invest a ton more into GPU mining. But those products are more readily available to the consumer public to invest in. Not only that, but also they usually come in at a cheaper price point. Whereas if we're talking about trying to purchase a single S19 or something like that, you're talking about 10 to 11 grand for the latest ones, sometimes 12. And they're able to purchase them in bulk, which means their price comes down. So from a competitive advantage, obviously that is going to be more influential. That's kind of leading me into this. We're going to talk about this. It's not typically something that I cover, but I wanted to because it really opens up that conversation about what cryptocurrency was supposed to do, what it's turning into, and kind of get some comparing and contrasting going on with this. So here you go. This is in Forbes. Elon Musk reveals Bitcoin creator Satoshi Nakamoto theory, admits he doesn't get Ethereum, and issues Dogecoin Mars prediction amid crypto price crash. So this is fun. Elon Musk, the Tesla billionaire who has both boosted and crashed the Bitcoin price this year, has become one of the most influential people in crypto. The Bitcoin price has fallen sharply this week, wiping over $100 billion in value from the combined crypto market. The Ethereum price has also crashed back, with some of Ethereum's biggest rivals leading the market lower and the meme-based Dogecoin losing almost 10%. Now Musk has weighed in on the mystery of Bitcoin's creator Satoshi Nakamoto, arguing the Bitcoin inventor's true identity isn't as important as the evolution of ideas that led to it, and naming crypto pioneer Nick Szabo, I don't know how to pronounce that, excuse me, as driving that evolution. Now, hopefully, I want to see what he gets into, but quote, you can look at the evolution of ideas before the launch of Bitcoin and see who wrote, about those ideas, Musk told podcaster and artificial intelligence researcher Lex Friedman, who had asked if it's a feature or a bug that Satoshi Nakamoto's identity is unknown. It's an interesting kind of quirk of human history that there is a particular technology that is has a completely anonymous inventor, end quote. Quote, obviously, I don't know who created Bitcoin. It seems as though Nick is probably more than anyone else responsible for the evolution of those ideas, end quote, said Musk, adding he claims not to be Nakamoto, but he seems to be the one that is more responsible for the ideas behind it than anyone else. I was hoping we were going to talk about the ideas, and I think hopefully we'll get into that here soon. Nick is best known for the inventor of one of Bitcoin's predecessors, BitGold, and digital smart contracts, which eventually evolved to become a key part of the Ethereum blockchain. Nick has previously denied he's Satoshi Nakamoto, telling financial author Dominic Frisby in 2014, quote, I'm afraid you got it wrong, doxing me as Satoshi, but I'm used to it. Quote, perhaps singular figures aren't even as important as the figures involved in the evolution of the ideas that led to things, Musk told Friedman, asking, quote, it's sad to think about history, but maybe most names will be forgotten. What is the name anyway? What is the name anyway? It's a name attached to an idea. What does it even mean? Satoshi Nakamoto's disappearance shortly after Bitcoin's launch has led to feverish speculation over the last decade as to who's responsible for creating it and sparking the wider cryptocurrency gold rush that led to the creation of thousands of different coins. The mystery of Satoshi Nakamoto has meanwhile helped Bitcoin develop as an independent, decentralized technology, which is the goal. That is the point. The creators of rival cryptocurrencies such as Ethereum co-founder Vitalik Buterin have struggled to escape their outsized influence over their projects, raising questions over centralization. Exactly, that is the key point in the differences between a majority of cryptocurrencies and Bitcoin, being that because we have an anonymous creator in Bitcoin, what we have ended up with is something that is truly closer to the decentralized platform for finances that was intended by Bitcoin and cryptocurrency in general. Whereas with anything that has founders or a group of people controlling it, you end up having centralized control. Case in point, of course, is the DAO. We can always go back to the DAO hack and the reversal that the Ethereum team decided to implement, even though they said code is law. And that is going to always be a sticking point that you need to go back to when we're talking about the principles of cryptocurrency and what it means to have financial liberty and be free to make your own financial decisions. And with something that is like Ethereum, yes, it was a hack. It hurt a lot of people, and reversing it, ethically could have been correct, it basically compromises the entire chain at that point, because it is clear that there is a ruling entity that can manipulate the transactions, which is completely against the initial white paper for Bitcoin. It's against the Cypherpunk manifesto, and it completely invalidates essentially its claim to decentralization. So let's go ahead and get into this. Musk also told Friedman he doesn't understand Ethereum-based smart contracts, blockchain-based self-executing contracts that run when certain pre-programmed conditions are met. Quote, I never quite understood how this whole smart contract thing, said Musk, joking, I'm too dumb to understand the smart contracts, and saying my general approach to any kind of like deal or whatever is to make sure that there is clarity of understanding. So we need to separate essentially, and here's where I'm going to kind of like push back, right? We need to separate what is a currency and trying to obtain financial liberty for the public, and what is a technology that is utilized to maybe participate within that ecosystem and to do things outside of just trade for goods and services. This is where Ethereum comes in. Now, there are some crossovers and we could get into all that, but the entire point of Ethereum, in my humble opinion, is more of a technological company that is there to essentially enable people to participate within blockchain, to be able to utilize them within applications and programs, create those smart contracts to essentially say, if you do this, I will do this. That allows and builds up on top of things for, of course, the metaverses that are launching, have launched, and going to be launching. It's going to enable, of course, this digital landscape of trading goods and services digitally. And that is kind of where Ethereum sets. Should there be, or could there be, a fully decentralized version of this that would be more along the lines of a principled cryptocurrency in general? I think there could be. It would have to go through the evolution, though, that Bitcoin went through, where you do end up with essentially an anonymous figure that doesn't participate, that originally created it, and make that entire process, decentralized. And I don't think that there's no real project that's out, right, that does that. Most of these projects have some sort of face to them, Cardano with Charles Hoskinson, that sort of stuff. So the entire premise here, or that is important, is to understand that because of the anonymous creator of Bitcoin, and because it's kind of just been put out into the wild for people to do whatever they want with it, it functions in that manner. And other cryptocurrencies do not function within that manner. I don't think, though, that invalidates all other currencies, to be clear. I think that everything can have their place. And in some sense, what Ethereum is needed to essentially evolve the platform for the trading of digital goods in the future, which obviously is going to be a big deal. So it's kind of weird. Let's go ahead and see if we can get some more insight at the end of this article. However, Musk went on to predict that the meme-based Bitcoin rival Dogecoin, or perhaps some other cryptocurrency, will eventually become the official currency of Mars. That's funny. Something Musk has previously hinted at with the proposed project to use his rocket company SpaceX to put a literal Dogecoin on the literal moon. Quote, I think Mars itself will need to have a different currency. I don't know if Mars would have a cryptocurrency as a thing, but probably it seems likely. But it would be kind of a localized thing on Mars, Musk said, adding the future of Mars should be up to the Martians. Last week, Musk, who this year called for Dogecoin developers to upgrade the meme-based cryptocurrency in order to better compete with Bitcoin and Ethereum, has weighed in on the crypto-wide row over Web3. The idea of decentralized crypto and blockchain-based version of the internet could replace the Silicon Valley-centric Web 2.0. So the thing about this is that's very odd to me is, like, if you're getting into Web3, then you should understand and get Ethereum. What confuses me is that he says he doesn't get Ethereum, he doesn't get the smart contracts, but he gets Web 3.0. I don't really understand that. And then how does Dogecoin relate to Web 3.0 in any form or fashion? Because it doesn't function as a programmable blockchain. That's not how it really functions at this point. Not only that, but it still has all the same issues that Bitcoin has from a power perspective if you need to scale that. And it has a huge distribution issue with the top 10 wallets controlling majority of the actual supply. It's very odd. And what I thought he was going to go on, I was hoping that Elon had the aha moment of, here's why, as I explained earlier, the principles of crypto function properly, and here's why I think Ethereum, right, is actually not that, because of the DAO hacks. They obviously have a controlling entity, that sort of thing. But his direction was just, I don't understand. That's highly disappointing to me. And I don't really agree with him in general, actually, on any of his premise for this. But if we were just reading the title and going off of that, I would agree from that perspective, as far as like talking about how, you know, the principles of Bitcoin are completely separate and important, obviously, but don't actually translate into other cryptocurrencies. Very odd article, but I hope that we got some clarification for people that maybe don't fully understand the crypto space and the origins of it. We have talked about this in depth in quite a few videos. I've harped on it a lot. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.